Alright everyone, here we are with another video with Invest for Tomorrow, and all I ask for in return is for you to smash that like button to let me know you watch this video. It helps out the YouTube channel and it lets me know you appreciate the time and effort I put into making these videos. Now, all I ask for is just a few minutes of your time, the next 5 to 7 minutes of your time, to hear me out on information that's going to save you money and trouble. Why? Because there's a lot of things going on right now. So the first thing is the tax hikes, right? We have the tax hikes coming, and that's something that's going to be negotiated. Some people are saying that that rate can't be, approved for capital gains. It might be less, it might be more, it might be the same. We need to see what's going on. That uncertainty really shocked the market. We saw that yesterday. Now, it hasn't completely shocked it because it hasn't really happened yet. But if it does, or we get close to that percentage rate, right, of 40 to 43%, we're going to see a bigger decline. But that's not the only thing that could affect the S&P 500 index. And that's what we're going to jump into now. But before we do, I want to show you guys the home runs of the week, guys. So this is our first one right here. There was a few different ones I mentioned that day, but NOVN had the biggest jump. And let's look at that graph right here. So NOVN, I talked about it when it was at 127. It dipped, it ran up, and it gave us a nice 5 to 10% early on in the morning. It dipped even harder, and this was the best entry point for that morning. Took off, giving 25+% on the day, guys. This was one of our home runs back on the 22nd, which was yesterday, and turned out to play itself out pretty well, guys. And you can see there when I mentioned it, it was at 127, sitting at 127, as you can see there. Initiated a buy this morning by Roth Capital. So that was going to give some hype to the stock. Now, another one that I mentioned here is SYPR. It had jumped and it was sitting at 360 when I talked about it, right? It was one to watch this morning. And if we go ahead and look here, right, at where it was sitting at 360 when I mentioned it. And it fell a little bit below that, closer to 342, 345-ish area. And it jumped up, giving a nice 8 to 10% early in the morning. And that's all we really look for. So that was a spectacular opportunity right there. But if you caught it anywhere around 360 or a little bit below, and you put a nice stop loss of 5 to 10% and it didn't get triggered, you were able to ride this throughout all the volatility. And this is the biggest home run so far that we've hit in just a matter of hours in the last month, guys. And I just started the Discord, so if that's something that interests you, you can join us over at the Discord. The link is down below. We're 100+ members already, and we look forward to having you join us, filled with a community of smart and intelligent investors. I think that's probably one of the biggest takeaways that you can obtain from joining, guys. Not just what I say, but the community overall, looking out for each other with a goal to maximize profits and minimize losses. So this ran up 50+%. Almost 60 actually at this level here, 60 to 70 on the day. But from that entry to there, that was definitely 50+% on the day. This was a big one here. So another one that we went ahead and had an opportunity on this week was AMBO. And this one was sitting at 246, guys. They had a contract or a partnership with Amazon announced that morning, and that was on April 19th. And we can see here on the chart how it reacted, guys. This one was mentioned literally at probably one of the best points, right? It was sitting at 246. You can see it there. When I said it, 246 needs volume, just slightly past 1 million in volume. And here you see it. It ran up, giving us 15% at the first exit point or first run in the pre-market. Pulls back, right? Goes a little bit below that 247 mark and took off for a second exit opportunity of 20+%. And if you held through all that volatility and you had a stop loss and it didn't get triggered and you rode it, this had a chance to give you anywhere between 20+% to 30+% at its highest peak, guys. This was the best home run of the week until we hit the home run today of 50+% with SYPR, guys. If that's something that interests you, you can join us. The link is down below, and we look forward to having you join us. So the S&P 500 index, guys, it's at 4180 again, okay? It's almost at its highs again. and it's trying to fight to keep going, right? But it got pulled back. Now, what is going on here? So the S&P 500 has been running, it's overextended by many indicators, and it's overextended by many analysis ratings, right? A lot of experts are saying that this could go to 4,200 and a little bit above, but I'm telling you guys that the pullback is bound to come, guys. We could see it hit anywhere between, obviously, 4,000, right? 4,000, all the way down to 39, and worst case scenario right now, 38. But if there's a huge, right, compound of negative catalysts with the hike in interest, number one. Number two, treasury yields spike up again, right? Because they've been pretty stable if we think about it for the last 3 months. And if we put the 6 month, it jumped up and it's been pretty stable sideways, which kind of detached from the whole entire market, not pulling it down. If not, we've gotten used to these numbers. But if it spikes up, it can shock the market. And then this third thing is inflation, guys. And inflation is coming. And the Federal Reserve said, we're going to go right through it. We're going to let it do its thing. It's almost like, you know, when the high tide comes and the waves are coming in by the ocean of the, you know, the coast, instead of moving things a little further back, right, to not allow, you know, the water touch it, they're just going to sit there and let the high tide come and kind of touch over it, or actually land over it. And then when the high tide, you know, subdues or passes, some of that water is supposed to retreat and low tide's supposed to come back. And that's literally what they want to do. They want to let interest rates just go to high tide, not worry about it, not move a single thing at the coast of the beach. You know, we don't need to pull back. We just got to stay in place, let it do its thing. And once it cools off, it'll pull back to its normal place. Low tide will stay as it's supposed to, and the high tides won't reach up to where they used to reach, right? And this is just metaphorically speaking and an analogy and an example. I hope you guys are understanding what I'm saying, but basically in the sense of the coast of the water, they're letting the water just come all the way up, right? Kind of touch and graze, and then even if it overflows, they know it has to pull back at some point, and once it pulls back, things will just cool off, right? And then we also have Bitcoin falling and collapsing, guys. There's a lot of things at once happening right now that the S&P 500, if it continues to overextend, guys, it's bound to pull back because of inflation, because of this possible rate hike of investors getting out as a tax, you know, break. Either they do it now or they do it later. We'll have to see, because at the end of the day, the closer we get to that getting passed, and then there's a, you know, a spike in the tax rate for capital gains, investors that are multimillionaires, billionaires, and institutional investors are going to want to get out to pay the taxes of this year and not the future taxes that are to come, that are supposedly going to be more, eating away some of that capital gain. Not only that, we have inflation, and then we have SPACs running now more than ever after they've crashed, and they're bound to pull back again by all these different catalysts. So it's like almost a double confusion. Like, it's like we were falling, we're running again, and then all of a sudden we're going to pull back even harder, and people are going to be even more confused. So I want you guys to be aware. I hope I'm incorrect and we keep on running, but this is just my opinion, not financial advice. But I want every single investor and viewer to be aware. Now, just because the stock market's falling, I want you guys to know and keep this in mind, that it's not the time to leave. It's the time to stay and learn more about it and be around, you know, individuals that know what they're doing, or at least trying to work their way through the navigations of the water, right, of the issues. And if not, if you want to do it individually and you don't want to be part of a community, that's fine. But make sure that you're not leaving and giving up. This is the best time to be paying attention to your favorite stocks, because the prices that are bound to come, you may not see again, and they're probably going to be the best prices of the year. But it's going to take, for all this process of uncertainty to kick in and happen, it's going to be anywhere between a 200 to 300 point drop, maybe, and it's going to take a few months for it to all hit. But This is something that I'm anticipating, experts are anticipating, the research I've seen is anticipating, and we are overextended and we're due for a pullback. But this pullback isn't just a natural pullback. It's going to be filled with negative catalyst types of pullback, guys. And we're going into the reopening plays, right, of them hitting newer highs. And once we reopen, they're not going to really have much more to run unless the economy is actually filling them up with cash, right? And people are actually going out and spending. Maybe those stocks can hold themselves up, but most of them, they might even get dumped right when we reopen. You know, the stock market runs in anticipation, and once the reality happens or the news is out, no one really cares anymore. Everybody leaves. Haven't you seen that with SPACs? Everyone is buying before the SPAC merger, and once the SPAC merger is announced, what happens after to the stock? It collapses. Same thing with the whole market, guys. This is all anticipation of the reopening, the economy, the outlook, and then we have a lot of things that are bound to come that are going to make it turbulent, guys. If you want to learn more about the stock market and you want to know what stocks I'm watching weekly as well as daily to keep on hitting home runs and opportunities like that to learn and grow and be part of a community of 100 plus members, you can join us. The Discord link is down below. Slots are filling up pretty quickly, guys, and we look forward to having you join us. As always, thank you guys so much for watching, and let's make some money.